The following podcast was recorded on Tuesday, March 1st, 2022, featuring Jim Bianco of Bianco Research. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome, everyone, to the latest edition of our podcast series, Talking Data. I'm your host, Kristen Radosh of Arbor Research and Trading, joined today by our presenter, Jim Bianco of Bianco Research. Today, Jim will discuss the recent weaponization of the financial system and implications for both traditional finance and cryptocurrencies. So, Jim, we started out February. We had the crackdown on Canadian truckers, and we ended with sanctions against Russia. Can you talk about the events in February and their significance?
Yes, and those were the big events, but there were some other ones. So I wanted to kind of quickly highlight what's happened in the last 5 weeks that's got people reassessing. Let's go back to last week of January. There's a guy named Hayden Adams. He is the founder of the cryptocurrency decentralized exchange Uniswap. It's the largest decentralized exchange in the crypto universe. Hayden tweeted out on January 24th that without warning or reason, Chase, JP Morgan, closed his bank account. Told him, here's a check with all the money that's in your bank account, go find another bank. And in Hayden's tweet, he said that they're cracking down on other crypto developers. Thanks for making it personal. So the implication there is that JP Morgan is looking at a startup competitor and basically punishing them for being a competitor. First week of January, the truckers had started a GoFundMe campaign. They raised $9 million. Then, under pressure from the Canadian government, GoFundMe then decided to close the truckers' account. And then they said, if you don't go out and request a refund, we will send all the money that's not refunded to a charity of our choice. Look, I'm not going to mince words. That's effectively stealing their money. Then under social media pressure, GoFundMe eventually relented and they actively refunded all the money. The truckers then used some other means to raise the money, and then Justin Trudeau put on the Emergencies Act. Part of the Emergencies Act was that they were allowed to go after the finances or the bank accounts of protesters. Basically, they took your money away from you. They froze your bank account. And if you donated to the truckers a few weeks earlier when it was perfectly legal to do so, they invented this phrase called retroactive laws and then went after you and froze your bank account because you now are in violation of a retroactive law. It's a very dystopian term. And then finally, in the last week, we have seen the world Western countries come together to isolate Russia in a, from the world financial community as well. So take all of this in total. 5 or 6 weeks ago, if I did a podcast, so let's talk about the importance of decentralized permissionless money, where you put your money into an electronic wallet and you hold your own private keys, your password, and no one, not the government with all its might, if they don't have your password, can take it away from you. Most people's eyes would glaze over. Well, I'm not interested in that subject. All of a sudden, given all of this cascade of events, this has become a very, very relevant topic in the last couple of, literally in the last couple of days.
So we speculated on the high correlation of cryptos to stocks. Has that changed?
Yes, it has, and it's changed for all those reasons I've outlined. So if you look at the first chart we have, this is the in orange is cryptocurrencies and in blue is the S&P 500. And the bottom line, green red bottom line, shows you the correlation over the previous 10 weeks. It's 0.82. It's almost a perfect correlation between cryptocurrencies and the stock market. Now, let me just stay up front. It should not be this way. But the reason it is the high adoption by institutional investors. When a pension fund or a mutual fund or somebody else, What do they do when they say we're getting into cryptos? They open a Coinbase account and they buy Bitcoin. Okay. What metrics are they going to use to value how much Bitcoin they should use or what its fair value is or anything? They're going to treat it exactly like they treat a small cap, non-profitable technology company. So it trades like it's a levered position to the stock market. And that's what the correlation shows. Again, I don't think this is right. This is going to last forever. But is there going to be events that come through and break that correlation? If you go to the next chart, the answer is yes. Yesterday, we saw an 11% rise in Bitcoin, the biggest one-day move since May, on a day the stock market was down. So that correlation, now it's only one day, but boy, what a day. It really broke in a big way. What happened? If we go to the next chart, that succession of events I talked about in February culminated yesterday with Keiko is a crypto information firm. USDC is the stablecoin US Tether. We saw record volumes of exchanges from the Ruble to Tether. And if we go to the next chart, we've seen record volumes of exchanges from the Ruble to Bitcoin as well too. So the bottom line with this is you've seen a lot of people now understand the need for decentralized permissionless money that's outside of the reach of the government. And we've seen them act in total. Was it purely the Russian disconnection from SWIFT and the central bank ban and everything else? And that was a large part of it, no doubt. But this creeping aggression, you know, if you displeasure JP Morgan, they'll cancel your bank account like they did for Hayden Adams. If you raise money for something that was fine one day and the next day GoFundMe decides that it's not fine, GoFundMe will just take your money and donate it to a charity of GoFundMe's choice unless you get enough social media outcry to force them to change their habits. Western governments in Canada can just summarily say, retroactive law, what you did on Monday was perfectly legal, but on Tuesday it is illegal. We'll take all your money away from you without due process. And then if you're a government that acts inappropriately, we will disconnect you from the financial system. Now, some of these, all of these might have individually been justifiable acts. I'm not a fan of what Russia did, obviously, and I don't think anybody else is, and they should be punished. But we've done it. We have weaponized the financial system, and we're doing it against individuals, and we're doing it against countries. We cannot undo this now. And people, I think, are recognizing a very truism. While all of these things always start off with perfectly justifiable and meaningful reasons that we do them, if you give the government this kind of tool, and I'm talking about any government, not just the United States government, they will eventually abuse it. And the stakes are now really high because the abuse is not just you cancel me from Twitter, the abuse is you take all my money. And that's why I think we're starting to see people reassess the whole financial system at a time when there is an alternative. Look, if we did this 10 years ago, 15 years ago, there wasn't an alternative, but there is an alternative now.
Can you talk further about the rush out of the ruble?
Yeah, so the rush out of the ruble is having a bigger impact. Of course, you're seeing people move out of the ruble. You're seeing the ruble weaken. Now, let's keep in mind a couple of things that's going on. Foreign investors have been banned from trading in the ruble and have been trading in Russian securities. The Russian stock market, as we record on Tuesday, March 1st, has been closed for a second day in a row. The weakness in the ruble is all about internal Russian weakness. People are desperate to try and get their hands on either physical cash or trying to get their money out of the country. And you're seeing it intensify even on Tuesday than it did on Sunday night. And that intensification is showing up in a lot of ways. So I got to get my rubles. What am I going to do with my rubles? I got to get it away from the ruble because it's losing its value. I'd like to get it in dollars, but I can't. But I can't open a crypto account. I could buy Tether, which is a stable coin, or I could buy rubles. or I can buy, Bitcoin as well too. Bear in mind, no foreigners have been trading in this market. So once they open it back up to foreigners, foreign investment that's in Russia, the assumption is they'll want to desperately exchange their Russian assets, their stocks and their bonds for dollars or Bitcoin or euros or something just not Russia. So there's a whole nother wave expected to come as well too. And finally, if you're wealthy in Russia, and let's define wealthy like I've done here, and you own equities, the stock market hasn't opened for 2 days, and you have to think now that you are worth significantly less. Your net worth is significantly lower on Tuesday than it was last Tuesday. So you combine it all up, and you're seeing a giant rush out of the ruble by Russian nationals to try and protect themselves, and a giant beneficiary of that has been cryptocurrencies.
Well, Jim, thanks for your thoughts today, and thank you everyone for joining us. As a reminder, Arbor Research and Trading is an institutional research and brokerage firm. Our two most prominent offerings are Bianco Research and Arbor Data Science. For any questions or further information, please contact Gus Handler at gus.handler@arborresearch.com. Have a great day. 10 minutes, 48 seconds.